Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 16th of July Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Well, I'm sharing this screen in here because I think we have an issue. So hopefully this will come up later on. I don't think you're going to be able to see this live because it doesn't seem to be opening up as live streaming, which is an issue. So I'm going to get the tech team onto that. But I'm going to record this webinar anyway, and hopefully it will show up as we go forward into the day. We did have a query yesterday about webinars, or some queries about the webinar not streaming live. So it doesn't appear to be streaming live. So we'll get the tech team onto that and get that sorted out for you. I'm going to record it anyway, and hopefully you'll be getting this on the catch up. So let's start off with the calendar. What we've got coming up in here. I'm going to actually just dupe this calendar up, and then we'll go first of all back to yesterday's calendar. And it was inflation day, right? So CPI data in here, as you can see, slightly higher than expected, a slightly tick up in here on the headline number, but below expectations of both the month-on-month and year-on-year core CPI, which is more of the focus really in on that data. So that was better than expected, so certainly a positive. Looking into today, we have the PPI data, so the less important, but nevertheless coming up in 1 hour. We're going to keep an eye on that. In 1 hour, just under 1 hour, the core PPI and headline PPI numbers, plus the industrial production data a little after that at 9:15 Eastern. Then we have some Fed speakers, Barr at 10 o'clock, and Member Williams speaking at 4:30 in the afternoon. So fairly busy session in here. Say PPI in just under the hour, industrial production 9:15, Barr at 10 o'clock, and Williams at 4:30 in the afternoon. Remember, the Fed go on blackout period, so that's important to note. We go on blackout period for the meeting that we have coming up on the 29th, 30th of July. So blackout period kicks in this Saturday. So only the rest of this week, today through Friday, do we have any Fed speakers speaking on the on monetary policy. Turning attention to the earnings calendar in here. So we've already had some significant earnings coming through today. You can see Bank of America, slight beat on the EPS, slight miss on the revenue. This is important. ASML beating on both EPS and revenue. So the big semiconductor production provider in here. Also, you see Morgan Stanley, Goldman Sachs in here. So most of everything in here we've had so far from the big names beating expectations. So that's all positive. As I said yesterday, US core CPI rises less than expected. Again, despite the tariff impacts in here. But talking of tariffs, Trump says drug tariffs are probably coming. And if we go to this is at the Morning Briefing America. So that's obviously another negative, weighing a little bit on markets in here today. Also, a lot of speculation about who will replace Powell next year, and even suggestions that they might try and get fire Powell and get him out before his term is up next year. So so some negatives coming through on that front. Wall Street set for cautious open ahead of the further US inflation data. That's the PPI data that we have today. S&P 500 and NASDAQ futures slip on rate and tariff concerns. So rates pushing higher, longer term rates, that is 30-year bond broke above 5% in yield. That's selling off. So bond markets are putting bearish bets on the economy, bearish bets on inflation. So bond prices are going down. We've retained a negative bias on our technical analysis for some time now, and still say bearish on bonds right the way across the yield curve. So and bonds, and we'll come to the little bits on that coming up shortly. Stock futures trim losses after upbeat US earnings, and despite earnings doing well, markets not reflected that. But look, bond traders boost bearish bets as US 30-year yield eclipses 5%. Tariff inflation irks bonds, so concerns around potential inflation from tariffs, even though it's not coming through in the CPI, which we had yesterday, seeing bond markets sell off. If we go around the major exchanges or major regions, Nikkei was pretty much unchanged, with the Hang Seng just down 0.3, churning our attention to the European exchanges. Not much change in here, but slightly up. The UK FTSE up just over a tenth. Nearly 0.3 up on the Nasdaq, on the DAX, and pretty much unchanged on the French CAC. And if we go and take a look at the US futures, I thought I'd pop this out. US futures in here on the overnight. So little concerns in here regarding the tariff comments from Trump around pharmaceuticals, but pretty much unchanged on the S&P, saying that, and about 2/10 down on the Nasdaq going into today. Pretty much no chance of a rate cut in here at the July meeting. Turning our attention to the interest rate markets. And we see in here kind of sitting at 50-50 and whether we get a rate cut in September. By October, certainly looking for a rate cut. And there's a 28% chance that we might have 2 rate cuts by October. And by December, market's still pricing in just 2 rate cuts in here going into the end of the year. Here's the bond markets, and we always look at the 10-year. Here's the 10-year. You can see edging towards the upper end of this kind of broader range that we've been in. Market's not been really that often above 4.6%, but edging up that way towards 4.5%. And a little bit more worrying here on the 30-year. So the long end bond in here, reflection of the economy. Remember, these are those bearish bets. We're just nudging above 5% in here on the 30-year bond. And we've only spiked up in here to like 516, 17, 516. So, pretty much that's the highest we've been since all the way back here, which is back in 2023. So the market certainly sending a bearish signal, bearish outlook from the bond market on the economy. So that's certainly a negative. We've remained bearish on bonds in here for some time since we took out a load of support. So right the way across the yield curve, 30 years, 10s, 5s and 2s, all looking very negative, going to lower prices, higher yields. And on the indices, though, they're retaining their bullishness. So markets hanging on to gains, sitting right up at the top end of those ranges, or making new highs in here. And so retaining that bullish aspect even as we go into today, despite the slight dips we've seen this morning. So looking for upsides, new highs posted yesterday on the Nasdaq. So all looking fairly positive still going into this today, despite the small dips, but despite the bond market painting that bearish outlook, despite concerns about tariffs on pharmaceuticals. Markets, the broader indices staying very, very resilient at the top end of ranges that they've been in, and certainly pointing higher, with the Nasdaq having hit a new high yesterday, and then the S&P not far away, so looking for potential further upside going into today. All right, I'm going to get this sorted out because it looks like we don't have a streaming live webinar in here at the moment, so we're going to get that fixed, and hopefully you'll be able to pick up this webinar on the recap. We'll get that sorted out today. All right, guys, going to wish you all a great trading day. Take care, stay safe, and we'll be back with you another Bull versus Bear webinar tomorrow on Thursday. Bye.